This video is my 40,000 subscriber portfolio reveal. Here's my first portfolio. The biggest investment is Spiders, 458 shares, average price $321. It's currently trading at $608, so I'm up 89%, 131K. The total value of my Spiders is $278. The second biggest investment is Amazon, 740 shares, paid $124. It's currently $227. I'm up 83%. That's a gain of 76K. Total value of Amazon, 168K. I bought Amazon in May 2020. I paid $124 a share on May 20th. So right here is May 20th. You can see on the top of the screen, it shows the open, high, low, and close. So it was around 120 at the end of May. Right off the bat, I was up. And then a few months later, I was even higher. So I bought it for 120, and you can see it's trading for around 170. This is 13 months later in June 2021. I'm up 29%. I'm pretty happy. And then it starts coming down, as you can see here. In May 2022, 2 years after I bought it, I'm flat. And I'm not getting a dividend either. Then a few months later, in December 2022, I'm down over 20%. Actually, I'm down 25%. I bought it for 120, it's down to 90, so 30 over 120 is 25%. So obviously I'm not happy, but I know it's a good stock. My portfolio is up like 150% the past 2 years. From January 2023 to December 2024, most of my stocks have killed it. Like Meta was under 100 at one point, I think it was like 89. And I'll show you Meta later at my other portfolio. I don't know why I don't put more into Costco. Because Costco and Meta, I'm so bullish on. I've always told people just buy those two stocks. I should listen to myself. Up 179%. I bought 140 shares. I paid $3.55 per share. It's over $9.90. Plus they pay a nice dividend, and I got a special dividend like a year ago, I think it was. I bought Costco in April 2021, so it's a few months shy of 4 years. I bought it on April Fool's Day, April 1st. Here's March 29th. It's pretty close. So it was around $3.50. And you could see it pretty much only went up. It hit about $5.70 after owning it 11 months. Then it did come down, but I was still up overall. It traded up and down, didn't move much over the next few months, and it had a really big bull run since the end of 2023. It almost doubled since the end of 2023. It's getting really close to 1,000 a share. You know the term KISS, keep it simple, stupid? That's what I should do. That's what you should do. Don't try to get all fancy. Just buy a good company and hold. Netflix, I bought 118 shares at $387 cost basis. It's currently $935. I'm up 65K. The value of that stock in my portfolio is 110K. This one's a really good lesson because I bought it in January and February of 2022, $385, then $434. So here's January 2022, $380 a share. The reason I bought it that time is because it was down nearly 50% from its peak. It almost hit 700 at the end of 2021. And that's January 2022. 4 months later, I'm down 50% on my investment. You see, in May 2022, it was 177. So of course I was kicking myself that I should have waited, but you don't know when the bottom is. Now, of course, I'm really happy I own it. So some people say, why don't you just keep buying as it went down? I guess if I had infinite cash flow, I can buy every stock as it goes down. You just only have so much cash. Even though I missed the bottom by quite a bit, I saved a lot of money by waiting for it to go down below 400. And I'm pretty happy with my return currently. XLY, I bought 445 shares at 113 each. It's at 233 currently, up 107%. Up 53K. The total value is 103K. And I bought this back in 2018, 6.5 years ago. I did pick up one more share in the beginning of 2022, but the bulk is in 2018, July 2018. A pretty low expense ratio, 9 basis points. Its biggest holding is Amazon, then Tesla, Home Depot, Booking Holdings, McDonald's, Lowe's, Starbucks, Nike, and then Chipotle. This is a consumer discretionary portfolio. Half the portfolio is giant companies, 29% large cap, 22% medium cap, 1% small cap. Pretty much all the portfolio is US companies, under 1% is Swiss companies. Then you have IWR, 916 shares, I paid 55, it's currently 95, up 74%, up 37K. Total value of 87K. Expense ratio a little higher, 19 basis points. This is the Russell Mid-Cap ETF. 77% of the portfolio is medium cap companies, 17% small cap. Almost all the portfolio is US companies. Palantir the biggest, AppLovin, Williams, Arthur J. Gallagher, the midstream company OneOak, the insurance company Aflac. Then you have Digital Realty Trust, the REIT, Hilton Hotels, MicroStrategy, Bank of New York Mellon. I've been accumulating Microsoft for the past year in this portfolio. I'm up to 54K, up 7%. I paid $416, it's at $443. A few weeks ago, I was down on this investment. What I usually do is I pick a stock and I buy shares in that stock with all my extra funds. So you can see May 2024, I bought one share. The reason I buy only one share is because I'm using all my dividends for the past month or two. June 28th, another share. September 3rd, another share. 9/26, another share. October 4th, another share. On 7/19, I bought 18 shares. I think I sold one of my stocks, or maybe I had a few $1,000s to throw at it. I can't remember exactly why. In February 2024, I bought 27 shares, so dropped about 11K into that. Here's another sub-portfolio within the larger portfolio. So you can see I bought one share on May 20th, one on May 29th, one October 1st, then 2, 2, 3, 4, 4, 7. I did buy 47, a lot here. So that's kind of like my strategy. I like to buy and hold long term. Then I pick a stock and throw all my extra change at it. Maybe next year I'll pick a different stock. In my second portfolio, I was doing that with Meta. I threw all my extra money at Meta, or sometimes spiders as well. Apple's up the most percentage-wise. I paid 72, it's 243, up 32K. Total value 45K. I bought 120 Apple shares on November 2019, 32 in May 2020, 24, then 8, then 3. Apple was a stock for a couple years I was throwing all my extra change at. Pfizer is the only stock I'm down 29%. I put 50K in, I'm at 35K. Google up 21%, and I was down like 30-40% for a while because I bought this I think 3 or 4 years ago. QQQ up 17%, 44 shares, paid $450, it's at $526. I bought this fairly recently, May 2024, so I'm pretty happy it's up 17% in about 7 months. Invesco QQQ, expense ratio 20 basis points. Let's look at the portfolio. Half the portfolio is giant companies, 36% large cap, 11% medium cap. Almost all US companies. The biggest companies Apple, then Nvidia, Microsoft, Amazon, Meta. Pretty much the biggest companies in the world. You got Broadcom, Tesla, Costco, Google, and Netflix. So this portfolio is up 81%. I put 590K into it. I added 480K. It's currently at 1.1 million. And I have 27K in cash. My wife and I are opening another business, so we need some cash to get that going. Here's my other portfolio. My biggest stock by far is Berkshire Hathaway. I paid $262K. It's 705K. I only own one share, up 169%. I bought one share in March 2017. For about 5 years, I was trailing the S&P 500 because I own the S&P 500 and Berkshire Hathaway, and I bought them at the same time. So for years, the S&P 500 was doing better. And I thought to myself, why didn't I just buy the S&P 500? Why did I buy Berkshire Hathaway? But now I'm happy because it's up more. Here's Berkshire stock since April 2017, and this is where I bought it. It had a pretty nice growth the first few months, up about 20 or so percent. In April 2020, I was down at one point. The low was 260K. 3 years after buying my stock, I'm down. If you don't sell it, it doesn't mean anything. It's like living in your house. If the value of your house goes up $100,000, it's not like you could spend $100,000 that year. Or if the value of your house goes down in a year $100,000, it's not like you can't buy food anymore. Only if you realize that gain or loss, then it impacts you. Of course, if you buy a stock, say you spend $5,000 on a stock, and the company is nearing bankruptcy, and the stock is worth $500, you're probably going to lose all your money. But with a good company, you just wait it out. Most people that invest sell when the stock goes down because they get too impatient and then they think the stock market doesn't work. That's like if you're 50 pounds overweight and after a month of going to the gym, you don't lose any weight. So it must be the gym's fault. It's not that you're overeating, it's the gym. The gym doesn't work. And the stock has crushed it the past couple of years like most of my stocks. It's trading pretty close to its all-time high. I've been buying Meta since I IPO'd. I bought and sold this stock many times. 658 shares, paid $258, it's $623. It's worth $410K. About half of the 658 shares I bought in 2017. 323 shares in 2017. I paid $150. And then I just kept buying more as time goes on. So these 2017 shares are up 315%. I put in $50K, up $150K, so its total is $201K. I also bought Meta in January 2022, 263 shares. Paid $339, up 84%. This was a painful ride, buying it in January 2022. I'll show you why. The reason I bought it in January 2022 is because I sold my business and I had some extra cash. And the stock was down about 10 or 15% from its all-time high. I think it hit 360 or so a few months earlier. But from January 2022 to November 2022, it only went down. It fell to a little over $90, and I was down nearly 70% from my investment. But that doesn't mean anything because I didn't sell it, and now I'm up 80%. Of course, I wish I bought more on the bottom, but I had so much invested in it. And it is really hard to throw money at it when it keeps going down. You're never going to time it perfectly, and you're always going to be upset whatever you do. If you make a ton of money on a stock, you're upset you didn't put more money into it. Or you're upset you didn't buy the dips. Or you're upset you didn't sell at a certain time. We're always going to look back and wish we did something different. It's like getting married. You always look back and say, wow, I wish I would have done it differently. ET I'm really happy with. I get a great dividend. And I'm up 123% on the stock. If you count the dividend, I'm probably up 160%. I put in $50K. The gain is $61K, $112K. Disney, that's been up and down. I was down at several points. Paid $85. It's currently trading at $117, up 36%. I was up nearly 300% on new a month or two ago. It has come down. I'm up 184%. I put in $20K. It's currently worth $54K. At one point, the $20K was close to $100K, but I sold some and bought Lumen, which is down 26%. So I put $20,000 into Lumen, that's worth $15,000. PDP, 231 shares, paid $57. It's currently at $118, up 104%. I bought most of it in 2018, some in 2019. It's a pretty high expense ratio, 62 basis points. I don't think I looked at this when I initially bought it. Half the portfolio is medium cap, 24% large cap, 12% giant, 14% small cap. 100% is US companies. The biggest is AppLovin, then Copart. You'll see Apple, Fiserv, TransDigm. I don't think I mentioned Spiders. That's up 99%, up 189K. The total value is 380K. I play it safe as well. I don't always just risk my money on individual stocks. I buy a lot of ETFs. I also bought call options on Lumen. I'm down 75%. But I got a lot of flack, a lot of heat for MicroStrategy. I'm only down 4%. I spent $3,000 on put options. I'm down $128. I bought 5, so that means I have access to 500 shares at a price of $100. So for me to exercise these options, it has to fall below $100. Of course, I can sell the option in the open market because it does have value. Even though the stock is well above $100, the value of this option is $28.75. So I could sell in the open market for around this price. When you buy options, whether it's call or put options, you can only lose your investment. You can't lose more than that. If you sell options, it's a different story. If I sell uncovered calls, my loss is infinite. But I'm not selling options, I'm buying options. I think I can handle a $3,000 loss. And I totally expect to lose $3,000. I think there's a 95% chance I'm going to lose $3,000. And I think there's probably a 4% chance I'll make a few thousand, like $10,000. And there's a 1% chance I'll make $50K. That's just options. I'm just having fun. It's kind of like going to a casino. I'm not looking to make money at the casino. I'm just having fun. I used to play options a lot in my 20s. I haven't done it too much lately. But with Bitcoin hitting 100K, I think there's a lot more chance of this stock going down than going up. That's just my feeling. I do think Bitcoin will go up overall. I think it'll hit 150K, 200K, but there's always ups and downs. When a stock or crypto gets really high, people like to take in their gains, and that drives the stock price lower. And when it gets lower, then people start buying it. So for my second portfolio, I put in 777K, I boosted that up 990K, and this is worth 1.8 million. I hope you enjoyed the video. I really appreciate all my subscribers. I can't believe I hit 40K. I hope I get 50K really soon. Thanks for watching.